Hello everyone, Philip from BlackBull Markets here, back with another whiteboards versus video. This one we're taking you through 5 common mistakes to avoid when trading, especially for beginners. A lot of advanced people also follow by these rules. So we'll be going through the first one. So the first one will be counter trend trading. So that's a big no-no, especially like I mentioned if you're new in the market. So the first thing we want to do is identify the trend. There are a couple of ways we can do that. 2 ways actually. We can actually we'll go through 3 here. So we'll go through our higher time frames. What we need to do here is identify on the higher time frames where the trend are. Now how we do this is we look at our daily, usually, our weekly, and our monthly. So now the easiest way to do this on these higher time frames, usually this is only on the monthly and the weekly. The daily, I'll show you another method. So first thing we're looking for is, if we're looking for an uptrend, what we need to see is a nice big candle to the upside. Now keep in mind this is for traders, normally not for people investing. Tend to look more at the fundamental side of things. So this is what we're looking for. Now on a downside trend, we're looking for obviously the opposite, which will just be a nice big bearish candle to the downside. So if we go to our drop from here to our lower time frames, like the daily time frame, we'll see the internal sort of structures of these candles. Obviously for the green candle or the bullish candle, we will see a nice sort of hopefully a clean move to the upside. Now if we don't see this, we know we are trading in consolidation. We did a video on that, so feel free to check that out. And then obviously vice versa on our downtrend sort of candle. Now to use a daily time frame to sort of check this out, this we get more of an in-depth idea of what is happening in the market. We can use things like trend lines. So now we'll be specifically focusing on the daily. You can use it on the weekly as well if you'd like, but I would recommend you look at the daily as you sort of just begin off with things and just try and get used to the movement on the market. So the first thing we're looking for in a market are obviously higher lows, not sure if you can see that, and higher highs. So what we have here obviously are higher lows and our higher highs. Now if we see this, we know it is an uptrending market. So what we can use now is a trend line as well. A lot of people like trading with trend lines. I'm not really a big fan. I usually just use it to, well in the beginning used to use it just to identify the trends. So obviously connecting our higher lows. And so we sort of have this uptrend moving to the upside. Now we know, okay, this is uptrend, we need to look for trades going in the direction of the trend. Now obviously it's not a good idea to buy here. You would obviously need to wait for a bit of a pullback to maybe perhaps some resistance or support and re-enter and push up again. We did do a video on this as well, so we looked at that. We'll just be covering sort of the basics of not to trade. So this is the basics. Counter trend trading, this is how to identify the trend. So always trade with a trend, especially if you're a new trader, to do so. Now moving on to the next one, we'll be going against trading in consolidation. Now we did a video on that as well. Like I mentioned, how to identify what sort of area in the market you are in consolidation, or if you're in the trending market, we use the candles to identify that. So please do have a look at that as well. So obviously consolidation is very, very easy to identify. All we see here is just the market. Actually, I'll use a different color pen, it's a bit easier for you to see. Is the market is just moving between 2 price zones. Now, especially if you're a new trader, this is, I would say even advanced traders, if you would want to avoid trading between this. Ideally what we would want to look for is either a break to the upside or a break to the downside. Now the one thing you need to keep in mind about trading in these things, don't trade it as soon as it breaks. Usually I would say 80% of the time you will see a retest of that zone either by a wick, and then we see a nice closing up, and then we can start looking for entries, stop losses below. This is just sort of market grabbing liquidity, and now vice versa for downtrends as well, where it tests into that zone to grab an extra bit of liquidity to push further down or further up. So that's a pretty basic, easy one to identify, just not to trade within the sort of consolidation area. And now moving on to the next one, which is not cutting losses. So this is probably the biggest one I've seen a lot of people burn themselves at. This is the biggest part of trading that people need to understand and need to get used to. Because this is probably the most damaging, besides not cutting losses and letting your trades go negative. We'll cover that obviously later. So this is a big one. So a lot of people, what they do is the trade starts to run against them and they keep moving their stop loss. So for example, what we have is you enter a trade, let's say for example a buy, and you put your stop loss below. Actually, you don't use the stop loss, which is also a big no-no, and the market starts to run against you, right? Now, what a lot of people do is they would look for, ideally, we would have a nice sort of support area that comes up, and they say, okay, the market will turn around here, and then it keeps breaking. Now, and it keeps dropping, where the people have hopes for the market to turn around. Now, my biggest question to anyone who always does this, I always ask them, how far will the market have to go against you before you close that trade? I've seen a lot of people burn their accounts, below their whole accounts with this sort of structure, so I would really recommend have a physical stop loss, not a mental stop loss, because this can keep happening. You say, okay, well, I'll let it go a little bit longer, let it go a little bit longer, and then eventually your whole account is gone. So definitely I would say before you even enter the trade, know where you want to put your stop loss. Like I said, support/resistance areas would be a great place to put them. Now, moving on to the next one is not letting your winners run. Now, everyone always says this, cut your losses short, let your winners run long, but no one really explains it. So I'll give you a brief explanation of how to do that. So like I mentioned, before you enter a trade, you always want to know where your stop loss is. Now, the similar thing is you want to know where your take profit will be. So the easiest way to identify that is, again, to jump to your higher time frames and look for the area. Now, let's say, for example, again, we are in a bullish market. This is on a higher time frame. For example, the daily, you're looking for trades on the 30-minute or even the hourly time frame. We sort of have this nice structure coming to the downside. We've hit a bit of support, and we're starting to go back up again. So a nice area for take profit would be ideally in areas where we have seen the market slow down, whether it's a strong resistance or even just a couple of wicks touching in a zone. For example, you have a couple of candles with their wicks touching. You can see that could be an area where the market could reject and push back down again. So this could be a good place to enter a trade. Now, the difficult part is if we look to the left and there's nothing there. So, for example, we have this in the US 30 all-time highs. People are unsure of where it's going. This is where the more experience comes in. So I would say stick to sort of trades where you can see something to the left. We have an idea of what the market can do. You don't want to be in uncharted territory, especially if you're a new trader. But the way to manage this is we will be moving on to our next one, is letting a trade go into negative. So this is a very easy way to use this method when you are in uncharted territory. So like I mentioned, for example, we are currently in the US 30, where we have seen all-time highs, and people are not sure you're not sure what's going to happen because you don't know when the market can stop. So we could use like round numbers, for example. Now, keep in mind the US 30 is lots of fundamentals as well, but sticking to the technical analysis, what we can do is if you place your trade. So again, for example, we are moving in a very strong bullish market. So we have the market pushes to the upside, and we've already entered our buy. We had our stop loss below, say for example, relative support, and now we are starting to move to the upside. Your trade is starting to go into profits. Now it's time for you to start managing this trade, right? So we're starting to see some profits. What I would do, or what I would really recommend you doing, is starting to secure some profits either by these two simple things. You can move your stop loss into break even, secure partial profits. Say for example you were in with one lot. Obviously on the US 30 we can only trade the one lot, but if this was your currency pair, let's use that for example. You win it with a one lot. Now you've reached a nice target, say 1-to-1 ratio. You can now cut that down to 0.5, and then you can slowly start to scale out of that move, because like I mentioned, you are uncharted territory. No one knows what the market's going to do. We can't tell the future. We just need to manage that trade now. All we need to do is just concentrate and see what the market is telling us. So that's an easy way to sort of risk it, not let your trade go negative. The other reason why you don't let your trade go negative is because if you do that, every time you'll take down little losses, and you'll never have positive trade. So not letting a trade go negative is just a nice way to manage your account and manage your profits. So hope you guys did enjoy that video. If you did, give us a thumbs up, click that subscribe button, followed by that bell icon for any new videos. If you want to get in contact with us, please do so. Go to our website, or you can email us actually at support@blackbullmarkets.com, and we'll get back to you as soon as possible. All right, everyone, thanks very much for watching. Trade safe.